Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Tuesday, and what an interesting day we had, right? Last week, markets were a little wishy-washy in their upper ranges. In the S&P, we had no traction trying to get past 2,000, and then we started to roll over a little bit, right? 1992 to 1994, the upper area broke. So some did reduce risk in that area because it makes sense. Who knows where you go? And then yesterday, technology really got hit hard. Down 1%, breaking its upper level. You had guys out there calling for massive corrections. And you know what? Sometimes, I'm not saying they're going to be right, or at one point maybe they could be right, but you never know. You let the action dictate. So if you did reduce risk yesterday and came in today pretty flat-footed, you had some decisions to make. One, do you try and play a bounce, and what do you play it for? Two, does the market rally, and can you re-short areas, and get that H sell set up? Or does the market rally too much that negates the power of yesterday's move and puts us right back in the same trend we've been in, on a more macro for a while? So, just to get down to it, you look at the cues. Let's go there first, okay? This is what we had yesterday on the close, right? Broke below the 8-day, broke below the 21-day. So if you sold a lot of your high beta names or some of your positions on a day trading or active level, you did the right thing. You also could have went home short, okay? Because who knows what could have happened. We could have went all the way down to retest this, which was the prior high. We could have went down and tested the 50-day, or some out there were saying, you know what, the rally that we've had for multiple years is going to get its first 10, 15, 20% correction. So when you get a break of the 8 and 21-day, you never know. But you don't have to know if you're in the right position, and the right position was to be light on your feet coming into today. So when you do come in today, and before you see what happened, which everyone knows anyway, there are a few things in my head. I said, you know what, if the bears have any control, they probably reject the bounce at the 21-day, or even where we broke down from a little bit, higher, which is about 99.06. So in my head, 98.90 to this, probably an area that, let's see what the bears could do. Then all of a sudden, boom, look at the size of that engulfing bar. That is very big. What happened? Did it stop at the bottom third? Did it stop at half? No. It sliced right through the 21-day, reclaiming it and coming right back to the 8-day and right back above this range. So today's action, hopefully, if you were super duper duper trooper, quadruple, whatever word is, bearish, this had to get you at least neutral. Okay, probably neutral to bullish, but let's not jump the gun, because we've seen this before. And at this point, it engulfed and trapped anybody who got out of their longs, and maybe even some shorts that said, I'm just going to keep going all in, and I don't care. And that's an opinion. And then we'll see what happens tomorrow. And then you go to the S&P, which was stronger yesterday. Okay, right around, I think, 11:30, I posted a chart on Twitter, somewhere. I'll get to that in a second. And I said, look at this, descending channel here. Maybe this is just a descending, grindy channel. Same way this was an ascending channel that resolved to the downside. Okay, maybe this is a descending channel, and we corrected from 2011, okay, all the way down to 1978. And if we can't continue lower to like the 50-day or whatever, maybe we break above it. And then that happened. So if we were to stay really, really bearish short-term on an active basis, probably wouldn't have got above yesterday's high, which was one spot to perhaps cover. You could have covered here, okay, which I'm sure some people did, okay, because this for that week, do we take out the prior day's high? No. And then I'm sure the uncommitted shorts probably covered here, and now they're probably like upset and not knowing what to do. And hopefully, if that's the case, if that's you covered, and now you'll wait and see. But this day was very, very engulfing, and you never know that's going to happen. Oh, by the way, with the Qs, you had a red dog reversal. Okay, just so you know, if you did sell the Qs, okay, here when it broke below 99.17 or 99.06, you could have rebought the Qs at 98.21. If you're a day trader, active trader, whatever you are, 80 cents, because it did put a low in at 98.05. So if you were a computer just doing my red dog reversal plan, you would have bought right here at 98.21, put a stop in at the low of the day, risked 15 cents to make, what is that, $1.10? And that's what your risk was. That's what the red dog reversal is. Okay, and then if you go to lots of different stocks, the same thing happened. I know it's hard mentally because it was even hard for me, where if you got out of a lot of positions and you had, shorts on the brain or at least neutral on the brain, you took trades. I said, watch the yesterday's low as a prior pivot. Maybe we go from red to green because there was a lot of things down this morning. So they went from red to green for a trade, and then some of them showed relative strength and continued, and some of them didn't. But all in all, there was lots of spots to put back positions you might have sold higher if you sold them correctly. But there were some guys who probably bought all day long yesterday, puked the bottom, and then maybe shorted the whole way up. Hopefully that wasn't you. But anyway, Facebook was a candidate, right? Facebook, if you go to the chart right there, you will see that this was the trend that broke. If you sold it when it broke below the 8-day here at 77.10, you didn't have to, sit in for this, this down move that could have created a move and could have went here, it could have went anywhere. Who knows what happens if the market falls apart, which a lot of people have been saying, but it hasn't. And then today, what happened? Boom. Okay, you had a red dog reversal. And this is actually where I made my cash flow money today because it started off negative. I said if it can get back above and reclaim the prior low, 73.43, that was the prior low, okay, you could get a trade there. I did not think it was going to happen like this. And again, if you were a computer and you bought 73.43 and you put your stop in at the low of the day, 73.07, okay, what is that? That's like 40 cents was your risk. Stock came in from as high as 78. If you got stopped out at the 8-day at 70 cents, you were risking, what, 30, 40 cents, $3 lower. And then you wound up, with the trade back, you made $2 on 30 cents risk just on that. If it was a day trade, and if you did if you did it where you're going to hold a little bit overnight, that probably works too. But don't have as much on the close as you had here. And if you go to the 5-minute chart, which is what we were looking at early in the morning, there were some setups in it. Okay, first move was right here, right? It quickly filled the gap. That was your cash flow trade. Question was, can it continue? So then it came back, okay, in a little bit in the first 30 minutes, and what did it do? From the low to here, did it hold the top third? Did it show some commitment to this move off the lows? Yeah. Gave you move to highs, came back, retested it, and then broke above here, and then pretty much, grinded all day. But this quick move, put it on the map, showed leadership because this did this well before the spiders and the Qs. So did Twitter. And then gave you a secondary move. And if you were thinking short Facebook, okay, once it came up into here, maybe some people shorted on this topping tail, but then once it held here and that happened, you should have just taken short off the brain and said, you know what, it's stronger and who knows where it goes, but it should never have taken out this resistance if it was going to be that weak, especially right here. So either you covered here or this was your cover spot around 75.20. If you covered at 75.20, you still made yourself or saved yourself $1. Twitter was the strongest one. Look how quickly Twitter went green. Boom. Twitter went green so quickly. So quickly through prior resistance right here. And then held, didn't even come back that much. Okay, and then just kind of grinded the rest of the day. And this one came off the lows quicker too on the daily. So now what's the story with Twitter? Definitely still needs some time, but it negated a lot of the pressure from here. And this little trend here that broke, maybe with a little sideways, it creates some kind of wedge. And then we could get another calculated move if you bought it today. Congratulations, and then see what happens. I'm still in a call spread. What did LinkedIn do after getting broken down? Look at that. I screwed that trade up. I bought the 80-20 trade also and didn't hold long enough. So maybe this gets back up to here and retests that area. Tesla also gave you not an 80-20 trade, but it it gave you, actually Tesla was hard. It was very whippy. Broke this prior upper pivot yesterday and came in a little bit. People are like, what could you do with Tesla? I guess today was a start. I still think it needs a heck of a lot of time, and people will probably be looking to short this if it gets another day, so we'll see. This was like the easy part of the bounce. Only took back a third, didn't roar back to where it broke down from like some other stocks. Then another trade that I think a lot of people did pretty well with, or this is a real good example of a red dog reversal, because typically I like to do one after 2-3 down days because you're trying to do a counter trend trade into an area that's calculated. And if you look at Mobileye, I did this trade also, and again, sometimes, being too quick gets, costs me money and doesn't make me as much as it could. This thing was as high as 58.61, came in 1, 2, 3 days, was red most of the morning, and then boom, as soon as it traded above 47.05, okay, which was $10 lower from where it was, still above this prior breakout, holding the 21-day. Lots of ingredients for a good trade. I don't know why, I didn't make as much in that as I should have or could have or whatever. There you go, 47.05 is your buy. Stop the low of the day if that's what you do, which was 46. So you had $1 risk, which sometimes is a lot, but it went $3.50. So if you were a robot and bought it here or an HFT and then had you stop there, boom, you held for the whole day and you made good money. If you're a day trader and you made money here and then you scaled someone, took some home long, who knows? Maybe you have a swing trade and at some point it goes a little bit higher. But this is a really good example. Like if I was going to make a glossary of the red dog reversal calculated long into support, that was it. And you go to the 5-minute chart to see how it worked out. What happened here is I think I was just too early on it. Okay, I tried it, I think, on this bar. Okay, or no, I tried it here too quick, and then that happened. And then when that happened, I just kind of took it and got out of the way. And then it really took, I guess, the majority of the day to form a nice pennant before giving you that secondary move. But all in all, again, if you bought it here and gave it to the low, because that's the strategy, it didn't stop you out. You just had to be patient and say, I'm giving it to the low. That's the strategy. And then boom, could have made you a decent amount of money versus over trading it. And that's one of my problems. I overtrade it sometimes trying to be perfect. But anyway, there's your day one start. See what else happens here. G Pro is still a little weak, trying to create an upper area. This stock's had an enormous run, hasn't corrected at all, so it deserved to rebuild. Here was your buy. Now it came a little bit off this. Let's see if this holds a little bit going sideways and develops a new range. Some of the banks held in just fine. For tomorrow, we'll look at Bank of America, see what happens with the Fed. Hilton, whatever his name is, the Fed guy, said that they're not going to take away considerable length of time. So that's why the market rallied also. So we'll see what happens here. By the way, this is, in today's morning note, I said, there are a few banks that have to hold a certain area, and they all held it. So we'll keep it on the radar. Above, what is that, 1693? Look at Morgan. Morgan held that level pretty well too. Key, sometimes you just write down support and held it, and maybe tomorrow triggers above that. Some people are talking about JP Morgan, which is really tight also. Hasn't really done much. A little overhang that Jamie Dimon might leave, but this is nice and tight. And if the banks go tomorrow with rates continuing to rise, there you go. It's funny what the market does, because overall, even with the I guess the statement that they're not going to take away considerable length of time, TLT still had a bad day and still caught in this downtrend since the island top, and the TBTs have been working its way higher ever since that gap and go island bottom. You look at the TLTs just real quickly, just to again show you taking your emotions, taking your pride, taking your pompous nature out of a trade. I'm not saying who that is or whatever. This was a really nice trend, but an island top is something you notice as a technician, right? These people are trapped here. This is down. Sometimes you refill that gap and it meant nothing, but sometimes it also starts a new trend. So you waited a day or so, and then once this happened here, that's your confirmation, okay, lower low of this island top, and you could have got out around 116 instead of sitting through to what looks like lower prices here down to 113. Anyway, I guess you'll see what happens if it does reach the 200-day, and on the TBTs, if you're waiting for a gap and go to trade against, there you go. There was your gap and go. Same thing, island bottom. It's the reverse of the TLTs. Down, boom, up, held the gap. You could have bought versus the gap, and now it looks like it's still trending. So you'll see what's next here. It's come a long way to the downside. So maybe 60.32 tomorrow is next. And that's really it. Just a few things to think about today, because this has happened a lot in the last few years. You have everyone out there talking about doomsday, talking about the big crash, talking about the house of cards, whatever it is. Okay, who knows? Maybe sometime we will get a meteor correction, and I would probably welcome that too. It gives you a better cost average over the course of whatever time frame you're looking at. Because if you have been investing for the last 30 years, 1987, 2001, 2007, the euro situation all created nice buying opportunities if you've been putting monthly funds into the S&P, right? If you sold bottoms and bought tops and got spun around and didn't stay the course, those did nothing for you. There are people who are saying, oh, I'm waiting for the day of reckoning. Okay, even if you sold the financial crisis the day before and you didn't get back in, how did you do also? So the more macro plan you have to keep, the difference is your active intermediate approach. So on an active level, in the past few years, we've seen the break of the 8 and 21 day. We've seen potent down days that could lead to a lot more weaker prices, and they didn't. So if you got out on those days or in that little weak time period, you were prudent. You didn't want to hold your nose, go underwater, and blow up your account. Yes, you may have been flat-footed like today. I was flat-footed today too. We all had our chances too to buy back in and stay with some things, even though today was unexpected. But anyway, stick to the process. I'll do it every single time. You see an engulfing day like you saw yesterday in technology with the choppy nature that we had in the market before then, get out of the way. But if today you got out of the way and you said, I'm going to short any bounce, and you shorted all day long and you covered on the close, then you probably did something wrong. The same way if you bought all day yesterday and then sold it on the dead lows because you were just on the wrong side of it. So just little things you need to mentally write down and work on. Hopefully you saw the BBC interview. That was a pretty cool show. The link is posted on the site. And also we have a webinar tomorrow. The Wiz, who is our chief option strategist now, he's doing a free webinar at 4:30 tomorrow. Go to the T3 Live site and click on it, get all the information. He's going to give a webinar on what he does, how he does it, why he does it, and everyone's been waiting for, in options, I don't want to say guru because it sounds like a salesy term, but someone who's good at what they do in options and makes a living doing it, and that's what he does. He ran his own site and did it very effectively, and he's made a healthy living doing it. And I love his mantra, Top Gun. He friggin', I think, flew 42 flights over Iraq, and then he taught the Top Gun school, kind of like with Tom Cruise. Remember, what movie was that? Oh, it's called Top Gun. So he was that guy teaching, not only doing. So anyway, so I'm sure he could teach you how to use options. So if anything, check out the webinar. I think it's at 4:30 and 7 o'clock. You can see the link. And if you want to also subscribe to his service, I would recommend it. I've been learning a lot just talking to him and following him. And when our heads collide and he's thinking about some kind of great bullish option strategy and I like a breakout, boom, you can play both ways. So anyway, lots of ways to skin a cat. Do what makes you comfortable, but don't have an opinion and be stubborn with it if the market doesn't confirm it. That could blow you up and get you in trouble. Have a good night.